And we're live. Phil Tarrant, Tom Panos, Real Estate Exposed 2022, 3 months in. We're back by popular demand. Thomas, how you going?
I'm good, Phil. I'm good, and part of the reason why it's a slow start to this year, I think I've been probably a contributor towards that. We've been talking off air. Um, I've got to be the first person in Australia that copped COVID 2 times in 4 weeks. So there's been a few times that I haven't been around. We've also had a few conferences, I think, that impacted one of the. I think it was 2 weeks ago. But we're back on air, and what's making headlines? It's a unique show for my audience because with you, Phil, we actually go over. It's a magazine-style program: investment, politics, business, real estate, summary of what REB's been doing with their stories. And, in 30 minutes, we try and cover a few of the trending topics and throw our views, which we don't have a monopoly on the truth, but hopefully we get the conversation going.
That's the idea. That's absolutely the idea, Tom. And we are back by popular demand. We got some good feedback over the break, and we haven't done this now for 3 months. So this is now officially, I'm happy to market, season 3 of the Tom Panos and Phil Tarrant show. Series 1 was what's making headlines when COVID hit, and we helped navigate that. Series 2, Real Estate Exposed, which was last year, having the discussions and talking about the things that everyone wants to talk about in real estate, often too scared to do it. And now this season, Tom, Real Estate Exposed again. The feedback was, guys, love what you're doing. Keep it up, keep it short, keep it punchy, keep it topical, keep it on point, and please continue to give us the interpretation of what's happening on and in the world and how that translates down into Australia and real estate in general. And Tom, mate, we're recording this. Who would have thought 100 years on, another European war, mate?
Yeah, look, it's not good. I've stopped following the war in the last 4 or 5 days, Phil. I haven't been across every bit of information as it pans out, though I did seem to have vaguely saw something that would suggest it may be coming closer to an end soon. Phil, do you want to speed us up to that? Ukraine, Russia, where are we at with things?
So, it's a very complicated environment, probably outside the scope of this chat, but there's a couple of things I would probably mention. I think they are working towards a diplomatic solution to the crisis. Call it what intervention, call it invasion, depends on where you sit on the fence. I think they're trying to use the good offices of Israel, potentially to try and broker some sort of peace accord. So that is underway right now. But, that's what's happening in Europe as it sits right now. There's been discussions of moving towards the brink of nuclear war, the closest we've been there for many, many years. That's all playing out. But for Australian businesses, and in particular for real estate agents and mortgage brokers and people involved in property, which is very much the audience for this particular podcast, the Prime Minister, Tom, made it very, very clear about 2 or 3 weeks ago, saying that Australia will be and has been pulled into this crisis in Ukraine right now. And the ramifications for Australian businesses will most likely be cyber reprisals from Russia. And he was at pains to say, Australian businesses, make sure you're right across this. And this absolutely falls into the realm of all real estate operators. Make sure you are absolutely focused on your cybersecurity right now. It's a great and a sage reminder about how your business can be impacted immediately through cyber attacks, whether they are coming out of Russia or any other state-based actor or criminal actor. Get your house in order. So if you're not yet thinking about this in your organization, if you don't yet have a plan in place, if you haven't yet got the right consultants in your business to help you out, and you don't have a business continuity plan, wake up.
So, Phil, it's interesting because I've heard that. And so what is it with Russia and cyber attacks? Like, is it that they're just so tech advanced? Is it a default method that they use in war? What is it with Russia and cybersecurity?
Well, you think about there's a concept called DIME, Tom, and it's getting a bit of sort of international relations, geopolitics type stuff. DIME. Write it down, Tom, because I know you're probably going to Google this tonight when you're going to do it. D stands for diplomacy. I stands for information. M stands for military. E stands for the economy. And to get some sense for what's happening in Ukraine right now and how the international community is responding to it, DIME. We tried to get a diplomatic solution prior to the invasion. Didn't happen. An information warfare component followed on. That is misinformation, all the skullduggery that has happened for hundreds, if not thousands of years around deception, information, fake news, using the media, all this sort of stuff is the I. M, military. We're at that spot right now, military intervention. And then the E being the economy. How the West has chosen to respond has not been boots on the ground support for Ukraine. It's been economic sanctions. So that's what's playing out right now. When you look at Russia specifically and what the Prime Minister was alluding to when it came to his warning to Australian businesses, the Russian playbook is very well known, how they respond to these type of things. There's a doctrine in place, how they go about fighting these types of conflicts across the DIME concept, if you want to use it. We know the playbook. The Russian playbook is very well known, and they're very good at it. They've done it many, many times. They've intervened into areas in the Baltic states there where they've crippled countries like Estonia through cyber conflict. So the smart people in the West that follow these things and make decisions around it know what Russia's going to be doing. So back to the cybersecurity thing for Australian businesses, that's definitely in their playbook. And if they can undermine, if they can disrupt, if they can cause distress in different areas, they'll absolutely be at it, and they're at it right now.
Okay, so to the people that watch this, it's got a real estate, bit of mortgage broking, and general, real estate pundits interested. Gang, you've heard it there from Phil. You probably, and I don't know, some officers are far more advanced on cybersecurity. Others just go to a IT support group that they've got. Speak to them and see whether you've done everything that's within your control to protect you. And, maybe what's within your control is not going to be good enough, but at least you're making an effort on the controllables. So this is important. Phil, let's move on from the war.
We'll do that, Tom. I'll just leave this with everyone. Essential 8. Google Essential 8. Just do that, and that'll Essential 8. And these are the 8 things you need to be doing in your business right now when it comes to cybersecurity. If you start there, you're going to be okay. At least you're going to be on the pathway. Essential 8, Essential 8, Essential 8. Put it into your brain when you think cyber in your business. Essential 8. Tom, let's move on. Sorry, mate. Now, I do notice I'm looking at myself here on the screen. I look like a walking billboard at the moment. I do apologize to everyone with my momentum tech stuff and my managed hat. And I think one of the reasons why we couldn't start this a week or so ago, Tommy spoke at Reinnovate. REB Reinnovate conference was all about innovation in real estate, and a lot of it is tech based stuff. I know Managed was a partner down there. I'm chairman of Managed. Tom, there's a lot happening in tech at the moment in real estate. Every story pretty much of Phil's and REB's around tech. We only saw today that Repeat has acquired Consul. So this is the ongoing saga of the development of property management software inside of real estate as the world Australia transitions away from trust accounting software into automated and direct payments. Tom, we're seeing a lot of this right now. Expect to see a lot more of it over 2022, you think?
Yeah, look, every day there's a story. One tech company's bought another tech company, people working collaboratively together. Every day of the week, Phil, as someone that's got a decent audience, I'm just getting at least 3 times a week. I have people saying, we want to tell you about something that we're doing, always with the view of trying to share that out into the real estate audience. So I'm getting things like, I'm getting people approach me for new social media platforms. I think one is called something 16. I forget what it's called. Have you heard of that one, Phil? It's essentially it's Instagram of real estate, right? And they all say it's the next biggest thing. Could be, who knows? But the managed software, 100%, that there is flying. I know that you've got an interest in that space, same brand as the cap that you're wearing.
It is, mate. I'm happy to report, Tom, it's about to go out. 1 billion in transactions on Manage. It just ticked over. So Manage has done $1 billion in real estate transactions since its launch. So big smile. I saw some guys earlier, they were popping champagne corks about it. It's a huge milestone. But it just goes to show the rapid change in technology.
Well, we've said it before. COVID-19 did what the CTOs couldn't do. They have fast forwarded. And being at that conference there, I was fortunate enough to actually spend my time there doing 2 sessions. One of them was interviewing Josh Tesselin and Michael Clark, who are clients of mine and who are both people that I consider high-tech, high-touch agents. Alan Galeb, who's another client of mine, has just put Managed is amazing. So he's obviously a user of Managed. He's out at Ryde, North Ryde. Alan, you'll be pleased to know that I'm going to be back on the Bay Run as of this weekend. He's the fittest. By the way, Alan Galeb is the fittest man in real estate. No question about it. There is no fitter. He owns Agency One with Ash, his business partner there. He is the fittest person. He's gone. We've used it for the last 12 months. So there's a good testimonial and accolade for you, Phil. Now, Phil, I had 2 sessions there. One that I spoke myself, and one that I did an interview, and it was so surprising. I didn't expect there'd be as many people there. There would have been over 300 people, maybe a little bit more, because I'd gone through that whole COVID experience and I'd had a big cough. I didn't stay for the awards because that, to me, we had 1,000 people in the room. And
I don't want you catching COVID for the 3rd time, Tom.
Mate,
not on my watch.
Listen, I'm not infectious, but I've got to tell you, it's not a good look coughing in rooms, inside rooms, and I did have a chronic cough. But you had 1,000 people. It was 1,000 people came to the awards night?
Or there's a few. There was less than that. Normally we get 1,000, but I think we were super surprised. The energy and engagement for Reinnovate. There was people banging down our door the night before trying to get tickets for it. There wasn't any of the sort of cautiousness I expected as a result of COVID. I think real estate wants to get back to business, Tom. 2022 is going to be a huge year, mate. Moving right on this same theme. Next big, I guess there's 2 key themes in real estate at the moment. One, what's going to happen to interest rates and what's going to be the impact on property markets. We'll get to that in a moment. But the big theme for this year, the federal election in May. When in May, it hasn't yet been called. The budget is on the last Tuesday of March, which is about the 28th, 29th by memory. We've got our big budget lunch we hold in Canberra for our national security space on the Friday. Now, Tom, interesting, and I saw a post from you on Instagram or Facebook, it's probably a couple of weeks ago now. Momentum Intelligence, which is part of the wider Momentum Markets Group, did a big survey just as the year was closing out, pretty much asking its communities, the 2 million plus people it connects with every single month, their voting intentions for the upcoming federal election and the policy issues that were most important to them. And we were able to do that at a macro level, but we're able to do it at an industry specific level. And we published a lot of these findings. There were stories all over the papers around it. 58% of people showed a preference towards the Liberal National Coalition versus 34% for the Australian Labor Party. 8% didn't know, Tom. So this is a point in time, and this is obviously a certain segment of Australia and Australians. This is the business sector, real estate, property, finance, defence, accounting, legal, etc., etc. In terms of preferred Prime Minister, Tom, Scott Morrison, 51%, Anthony Albanese, 30%, I don't know, 19%. So that's everyone who filled this in. It was about 3,000, 2,500, 3,000 people. Tom, you've done some polling yourself. What are you hearing? What are you seeing, mate?
So nowhere near to the depth that you had. And Phil, I'm going to tell you, it was 2 weeks ago, and I can't recall exactly what the percentage was, but it was a Liberal victory. But Phil, I don't know. Anecdotally, I'm hearing people in the last few days suggesting it's a lot closer than that. And I actually spent this morning, I'm in Byron Bay, and I was just sitting at a cafe, and I overheard one person say to another, what are the odds at the moment on Sportsbet, Labor versus Liberal? And I don't know. I did a bit of a search for 5 minutes. I just couldn't get any odds there. So I'm not quite sure what the odds are. But Phil, if you had to have a guess right now, we're on the 16th of March, 17th of March. If you had to have a guess, what's your feeling? Is it a Labor or Liberal victory in May?
Tom, I'm just a journalist, mate, here to deal with the facts, so I don't speculate on stuff like that. I couldn't tell you. But I will tell you this. The big report that we did, you can go and check it. You get it on Momentum Intelligence, called the Industry Insight Report Election Edition. The real estate services sector, Tom. So this necessarily wasn't about who do you think, which party's going to win, or which you prefer prime minister. What we wanted to get into was what are the policy areas of most significance to these different industry areas. And I'll tell you, real estate, the real estate services sector, 73% of people said the economy was the most important consideration that will shape their voting decisions. Small business interests was next at 59%. Climate change and the environment, Tom, was third at 42%. Defence and national security was also at 42%, and housing affordability at 42%. So they're the top 5 factors that will shape the way in which Australia's real estate sector at that moment was going to vote. They were the areas that they're going to be listening out to both of the different parties that best
You're talking about the real estate sector. You're talking about the real estate sector, and I find it very interesting that you've got climate change in there. That to me is a surprising result, Phil.
Mate, number three, Tom. The mortgage lending sector, so mortgage brokers and the whole sort of third-party distribution channel, voting considerations for them. Number 1, Tom, the economy. Number 2, small business interests. Number 3, taxation. And number 4 was climate change and the environment. So on both of those different areas, Tom, climate change is obviously a key factor for most Australians now. And to your point, I think Labor's come out of the blocks pretty hard with policies related towards, Australia's fair participation in combating climate change. So whether or not that's going to resonate with the Liberal heartland that may see some changes in voting preferences, who knows, Tom. To give you some sense, though, I've got the legal services sector here. And by the way, it was the legal services sector was the only sector of who we interviewed said they would they're predicting a Labor government rather than Liberal National Coalition government. But their policy preferences, Tom, by way of a compare and contrast: number 1, climate change and the environment; number 2, economy; number 3, federal ICAC; and number 4, housing affordability; number 5 was management of COVID-19. So just because you've got a big, high-paying salary and a corporate job with university educations doesn't necessarily mean that as a cohort they're all going to vote the same way. So, Tom, mate, the jury's out. I don't know how it's going to fall in May.
Okay. Listen, we all know Easter finishes, April 15 is Easter. Then we've got Anzac Day. Then we're moving into what is probably the campaign for the election, the federal election. It's an interesting time for real estate, Phil. And on that point, we might actually move on to the real estate market itself, Phil, because, my theme, and I was on the Gold Coast yesterday with Highland. What an amazing business. I'll give you an interesting fact about Highland. They were actually my first real estate client ever. They're in Cronulla. 1,200 sales, 50 effective business units, 3,500 property managements in Cronulla. You actually carried a story that they'd acquired LJ Hooker Double Bay, Bill Malouf's business. But they had a very good helicopter view of the market. It's gone from nuts to normal. Today I had a session with another client of mine, Kaloshi, another very strong office, does 45 million in gross commission incomes. What are they saying? Days on market have gone from 28 to 45 days. So all we're seeing now is the buyer energy and fear of missing out has subsided a little bit, right? I'm not saying the market's not great. I'm just saying that it's not crazy. Now, Phil, there's chatter about rate rises. There's chatter about, the market's going to drop. And we always hear banks, put headline statements about that. They've all had a crack saying drops of 5-10%. One will argue that if Labor were to win the election, it might not be as good for real estate as what if Liberal won the election overall. One could argue that. But Phil, the marketplace has definitely changed. But what I've noticed is if you've got an A-grade property that ticks all the boxes, they've still got the same number of bidders. That's not changed. In fact, every week, they're actually going up in price. So I can't turn around and say, hey, this is what the market's doing. No, this is what this submarket's doing. This is what this submarket's doing. This is what this submarket's doing. And in fact, there are certain marketplaces that have been totally resilient to the change in market in the last 3 or 4 months, Phil.
Yeah, I think what we're moving into, Tom, is a two-speed market, and we'll see it this way. I predict for the next 3 to 4 years. You're going to have areas which will continue to rocket, to grow at the same speed as what it has done. Remember, everyone's talking about this national average of 22, 23% growth for Australia last year. You got to remember that's nationwide. There is going to be markets in Australia that are still going to grow at that speed. In any market, there's good value in real estate if you know where you're buying and what you're buying it for. But you're definitely going to move into a two-speed market where those areas which has all the base fundamentals which have been accelerating or driving market growth over the last year is going to continue. But then you're going to get those markets that don't look and smell right, who has something particularly not right with them. There's certain demographic or population type appeals, and I think about, like, huge new development suburbs with multi-story tower blocks of all the same properties, and there's no people renting them out. Like, they're going to struggle, those sort of markets, until something drastic happens. Now, you look at the wider economy, Tom, everyone's talking about inflation, accelerating inflation. The Reserve Bank governor's come out and pretty much gone to everyone, hey, look, just take it a little bit easy, everyone. Like, all this speculation around raising rates. I said, i.e. the RBA, that they'll look to intervene in potentially lifting rates. They were talking 2024 last year. They're now indicating 2022. But the RBA governor wants to see genuine wage growth. Not seeing that yet. A lot of the inflation that we have right now that we're experiencing, Tom, is very much due to supply chain issues, that we just can't get stuff into Australia, or we can't make it. Only yesterday I was reading a piece around how China's trying down this pathway to eradicate the COVID virus rather than just assume it and live with it. That's going to exacerbate supply chain problems. You look at the war in Ukraine, what that's doing to certain prices around wheat and fuel. This is this manufactured inflation as a result of supply chain issues. And I'm being very general here. But that real wage growth, the RBA is going to see before they start tinkering with the rates. My view, and you see it, and sometimes you got to question it, Tom, and this is when you'll see me transition out of probably being a business leader into being what I really probably am, is a cynical journalist. If you talk about something enough, typically it's going to happen. Do the banks want rates to rise? Probably. They're quite happy if rates rise because they've already lent the money out. They're just making more on the assets they've already deployed and delivered. They'll have you believe that money's getting more expensive to acquire, and therefore they're planning for the future. This is this whole ongoing debate. But I think the banks have a vested interest in rates rising, and they're trying to talk down the market as well to try and de-risk their exposure to it. Is there something there? I don't know. Some of these markets, Tom, just seem to be bucking the trend, bucking the negativity of the news that we're reading. And, mate, we've steered this conversation right through COVID-19, Tom. I sat here with you on this particular live stream and this podcast, if you listen to it via audio, and I think both me and you were very sensible and considered in our commentary when COVID hit, when everyone was talking about, well, a lot of the forecasts were talking about 25% drops in property prices. We went, just take it easy, everyone. It's probably not going to happen, and these are the reasons why. Banks don't always get it right, Tom. Economic forecasters don't always get it right, Tom. Demographers don't get it all right, Tom. Economic forecasters don't always get it right, Tom. So I think two-speed market, in summary. Be careful where you're buying. And if you're in the business of providing advice to property investors and homeowners, and by that I mean both real estate agent and mortgage brokers, make sure you're providing the right advice to them that's relevant to them in their particular circumstances. Fortunately, Tom, and structurally in Australia, the banks have already put a heap of fat into mortgage rates and serviceability requirements. So if rates do go up and it gets more expensive to hold property in Australia, I saw some commentary just the other day. It doesn't matter if you're not selling. If you can hold on and you can weather that, and I think a lot of Australians have got that factored into the interest rates, you should be okay. It's going to be the fringes that might wobble a little bit, mate. And what's that going to do to the property prices? I can't see bargains sort of flooding onto the market with people trying to sell stuff at 10, 20% under what it was worth a year ago. I think what will happen, and we'll see it again, Tom, is that you just won't have as much stock on market. The natural equilibrium will remain. Thoughts? Disagree? Agree?
I agree with what you're saying. And whilst I don't like putting my neck out on the line and say this is exactly what's going to happen in the marketplace.
Yes, you do, Tom. You do it for a living. That's what you do. You put your neck out on the line and you tell everyone what you think. I'm the opposite.
Listen, I've actually got a pretty. If you were to go through the exercise of Google Tom Panos Telegraph, and you looked at every article, I can tell you one thing, Phil. I've got it a lot more right than most people, because when they said that it was going to drop 30%, I said it wasn't going to drop 30%. I said I wasn't even sure it was going to drop. Then I turned around last year in August and I said November, December was going to be great buying opportunities. Not that you've got to be Einstein or a genius to work that out. You just knew that there was going to be a lot of stock on the market, and there always is that time of the year, right? And that's exactly what's happened. So now you've inspired me, Phil. I'm actually going to say to you, what do I think is going to happen? Man, I think we've already had a bit of a price correction. Properties that I see that were average properties that were selling for $2 million, they've been going for 1.850 in certain markets, New South Wales, Victoria. I think properties that have been selling for 1.5 are selling for 1.4. Resilient properties keep going out. And I can tell you, there's a group of buyers out there. And when I ask them on a Saturday, what prompted you to buy now? They're saying, I want to lock in low rates. So there's a group of buyers who have a belief that they will have better affordability and they'll be able to borrow more money if they buy right now than when there is a change in interest rates, right? So, Phil, golden rule, you don't buy based on the market. You buy based on your life. That's it.
I completely agree. And got to remember, Australian families' balance sheets are probably as strong as they ever have been. More Australians have pumped more money into their mortgages. They're ahead of their mortgage repayments at any time, I believe, in history that we started calculating this stuff, Tom. But, you say some markets have already naturally corrected, or they're probably transacting at where they should be transacting. There's a story here, and it was in the Daily Telegraph. I know you like the Daily Telegraph, Tom. You're on their payroll, so we'll talk about them. I read the Telegraph, mate. Every morning I read the Daily Telegraph. It's part of my habit. I drop the kids.
You're not one of these guys that's got the Telegraph and then you pull out the Australian Financial Review and you put that on the cover so people are seeing that you're reading the Fin Review, but you're really reading Murdoch's stuff, mate, right?
I want everyone to know that I read the Telegraph, mate. I think it's a great paper, and it loves the Western suburbs.
Listen, Phil, you come from Telegraph territory. A lot of people don't know. You came out from the West, right? Like me. Yeah. Belmore, Lakemba, Daily Telegraph territory. We did the news agents didn't sell Sydney Morning Heralds out in Lakemba.
I didn't even know it existed, mate, until I grew up. So, mate, I love the Telegraph. They had a huge expose today about Western Sydney, talking about Western Sydney, how Western Sydney is like, it's more attractive. Essentially, the story went, it's just due to real estate, right? I've got property out there, and I think a fifth of all Australia lives in the western suburbs of Sydney. I might have that stat slightly wrong, but it's a lot of people, right? And they're saying that you've got Stuart Ayres, he's the Minister of Western Sydney. I know that the Premier down here is right across growing Western Sydney. That whole Badgerys Creek precinct, mate, it's going to boom. But they said there's more people globally interested in western suburbs of Sydney is what there is of the western Sydney. And they're pretty much sticking it to the snobs out here on the North Shore and the eastern suburbs, who they always talk down the West because they don't want the West to get ahead, but the West is the best, and West is going to be better than all these different places. The world knows that the western suburbs of Sydney is important. The rest of Sydney doesn't because they're snobs. Anyway, they reckon there's going to be huge investment out there. New cities are going to grow. And this is the nature of it. But the Telegraph, Tom, I read it every day. I drop the kids at school. I go to the local BP service station. I go to Wild Bean Cafe. I order my coffee. Then I go and get the Telegraph. I might read it, but I don't pay for it. And I flick through it and I go, got it. And the reason why I do it is so I can talk about this sort of stuff on air. There was a piece in the Telegraph, Tom. You talk about natural corrections to the market. This is around your neck of the woods out at Cabarita. I think I got that right. That's out Strathfield way. shock result of 730 or more. And I know about this also because I know the underbidder, a renovated Californian bungalow in Cabarita sold for $730,000 above expectation after two families fought hard for it, mate. 7 Stanford Avenue went for $4.338 million, mate. 730 over. The market is still booming in some areas of Sydney.
Yeah, so that auction was on Sunday because I actually read the story. Someone alerted me to it at a cafe on Sunday, and they said, "Can you go and bring it up on CoreLogic RP data?" And I did. It was a good result. But Phil, I'm also going to tell you, every time you read a property has sold 700,000 over reserve, one of the things you've got to say to yourself is, was that reserve an appropriate reserve? Sometimes yes, sometimes no. Phil, you've just frozen there for a moment. I'm going to hopefully bring you back in. So while Phil is coming back in, all I'm going to say to you, gang, is that sometimes when you have an auction and you hear about and you read about it in the Herald or the Telegraph or, the Courier Mail or wherever you're reading stuff, what you find, you're back in, Phil? Sorry, you froze for a minute. So, Phil, all I was saying is that on Saturday, I did 4 out of 15 auctions, okay? Which is not a great result, right? Properties weren't great, etc. A few overpriced vendors that weren't going to adapt to the market. And then on Sunday, I open up and I read about Cabarita, right? 700,000 over reserve. And every Sunday, I'll open up a press and I'll read about something that's sold for $1 million or 700 over reserve. Here's a few learnings. Number one hot day doesn't make a summer. You don't look at one property, right? Number two, you've got to turn around and say, hang on a second, was that a realistic reserve? Sometimes it is. Sometimes it's been a low reserve. Another thing, you've got to look at the property. As I said to you, Phil, if it's a property that is a triple star property, it ticks all the boxes, they're resilient to any economic conditions because people buy those properties based on their life, not based on the market, right? So you take that into account. But yeah, great. Look, I looked at the home as well. I didn't look at it inside, but I went on and looked at all the photos. Nice home, decent spot. Alexander Loretti saying great auction. Who knows? She might have been there, or she's an agent of the property. But Phil, that's what's happening. Now, listen. Before we leave, I just want to ask you quickly because it's going to save me having to call you offline. I'm getting a few people, and it does get confusing for me as well because REB is such a synonymous brand name now that we're seeing REB Women, REB Top 50, REB Awards Night. I'm getting asked by a lot of people, the REB Top 100. When is that? When is that announced, and when are the entries closing for that, or have they closed?
I think the entries have closed. So what we're doing now in terms of all of our rankings at REB, we're trying to, rather than getting people to do it at different times over different months periods, we've decided to put it all at one time, and we're going to collect all that data. We've just collected all that data in one hit, and by memory, and I might get this number wrong, but one of our team members individually, I know over the last 2 weeks or so, amongst all of the different entries that come in for the REB Top 100 agents, I think at the same time the Top 50 women, because it's largely the same numbers, as part of the audit process, individually checked 800 different sets of numbers from where there was a question mark over agent submissions. So it's a hugely rigorous process. By memory, REB Top 100 is around May, and that's what it should be. If that's different, I'll update everyone next week. As part of the Top 100, Tom, what we did last year, and remember this for the first time, we've had this feedback for the decade we've been doing a Top 100 agents that says you need to be in Vaucluse, or you need to be in Manly, or you need to be in Toorak in order to get onto that listing. It's weighted to where the highest sales happen. Yes, that is the case. So we introduced, as part of the Top 100 agent, Tom, the Top 50. So we actually look at the 50 in each of the different states that make up the Top 100. So if you participated in it recently and you go those numbers, you're in the running for that at that state-based level, but also at the Top 100 agent level. So Top 100 agents should be happening in March, Tom, and that's when the Top 50 is released simultaneous with that. And if I don't have that right, I'll correct myself next week.
Okay, Phil, listen, We're back into the swing, back into the operating pattern around this time every Thursday. What's making headlines, a summary and a chit-chat, and good to talk to you again, Phil. I hope that all our listeners, viewers, depending on whether you're a podcast consumer or whether you're picking up live stream on social media, I hope you enjoy the show. We have come back here because there were people saying, hey, when are you coming back to do your jibber-jabber conversations? That's what they called it. So we're back. So, Phil, look forward to seeing you next week.
Thanks, Tom. Good to be back.
Okay.